Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello and welcome. This is ET Markets Crypto TV brought to you by Mudrex. For all those who are new here, this series is dedicated to sharp conversations aimed at demystifying various facets of crypto. I'm Miloni Bhatt, and today we will be diving into Bitcoin halving. What is the fuss all about? And will Bitcoin surge because of this to 10x? Now, first of all, what is halving? Bitcoin halving is when the reward for Bitcoin mining is cut in half. Now, this happens roughly every 4 years. So why is the reward reduced? Well, this reduction is inbuilt into Bitcoin's mining algorithm to counteract inflation by maintaining scarcity. In theory, slowing down Bitcoin issuance is anticipated to drive the prices upward, assuming that demand for Bitcoin remains constant. So why are we telling you all of this? Well, it's because Bitcoin is expected to go through a halving cycle in April this year. And analysts have predicted a bullish 2024, with Bitcoin potentially exceeding $50,000 in part due to halving. So as a crypto watcher, what should you know about this and its impact on crypto overall? Now, to explain all of this, I have with me Edul Patel. He is the co-founder and CEO of Mudrex, and he's going to talk about the relevance of the traditional halving cycle, the maturing market, and how it could potentially reshape dynamics beyond just the existing historic patterns. Edul, welcome.
Thanks a lot, Miloni, for having me here again.
It's a pleasure to have you here. Edul, can you dive a little bit into, why does this happen, this halving? Explain the technical aspect of it and the crucial role in the Bitcoin network's functioning, considering its impact on, say, rewards, scarcity, and then possible price increase that I touched upon.
Correct. So Bitcoin, as we all know, was started out of this movement that began right after the 2008 financial crisis, where the thought process was that in the financial crisis, a lot of banks failed. And to support them, the US government and governments all over the world just continued to pump money and save the banks. What that led to is that although the banks got saved, but everyone else in the world suffered through long-term reduction in their value because all currencies got inflated, right?
Yeah.
So, philosophically, Bitcoin was born out of this social movement. Here, we want to make sure that supply of this valuable asset is always constrained. Now, that is one part. And to do it, the way the Bitcoin creators, Satoshi Nakamoto, thought of the execution was that first part was that Bitcoin needed to be earned so that it can be generated. The process of earning should be very closely associated with the security, which is why new Bitcoin can only be generated via the process of mining. What Satoshi also foresaw was that as time progresses, Bitcoin will become more and more and more and more popular. And because of the scarce limit, what you will need to do is you will need to reduce the rate at which new Bitcoin comes out. And as a result, what was agreed upon very early on was that every 210,000 blocks, or roughly every 4 years, the rewards that are given out to miners, which are given out to make the Bitcoin blockchain secure, those rewards will be halved. The expectation was that miners will, although get half reward, they will still continue to put in the effort of mining because Bitcoin will be more popular. So the dollar value of Bitcoin that the miners will get will still continue to go up and go up and go up, right?
All right.
That's kind of some of the historical construct behind which halving was put in. And we've gone through 3 halving cycles. This is the 4th one. And this will continue till 2040. So 3 more cycles to go.
Okay. What is the outlook like in the current landscape, with the live spot Bitcoin exchange traded funds, a rising Bitcoin post 2020 lows? Do you think that the upcoming April Bitcoin halving could be a potential catalyst for crypto prices, just like the rally in Bitcoin preceding the SEC's approval?
Correct. So historically, what has happened is that because most of the Bitcoin generated first goes to miners,
Mhm.
miners, and if the supply of Bitcoin reduces, and the demand continues to go up, miners tend to sell Bitcoin at higher prices post the halving event. Now, this still continues till date that a lot of Bitcoin does go to miners. And that's where a lot of the reward pool sits with. What also continues now is that more and more and more people have started to realize that they just want to save Bitcoin for the longer run. And then there are actors like the ETF creators, the BlackRocks, the Fidelities, and so on and so forth of the world who created Bitcoin ETFs now, where already a large chunk of Bitcoin has started to just stay dormant. All of this causes a lot of supply pressure, like lesser Bitcoin being created, more demand of users because they want to participate in this asset class that's emerging, more demand not from the perspective of trading, but mostly from the perspective of buying and holding and keeping. This causes demand to go up, supply to go down. And typically, when this happens, prices go up in most markets. So, Bitcoin historically always sees these cycles where the end of the bull run, the start of a new bull run is almost always triggered by Bitcoin. Now, I would argue and say that over the last year, we've already seen Bitcoin rise by about 100 and something percent, right? Which itself is a large number. This happened prior to the last Bitcoin halving event also, where Bitcoin started to see this rally close to a year before. And then just beyond the halving event, more and more and more people started to recognize why it's important, why it's necessary. The hype cycle just continued to spread the gospel of Bitcoin to more and more people, and more people just wanted to get in. That's what we always expect to happen. That's what we expect will happen this time as well. So because of supply demand dynamics, prices should go up. That's what we expect.
But given, as you pointed out, the crypto euphoria that exists, the historical influence of Bitcoin halvings on market sentiment, do you think that the market has factored in this upcoming April event? And what are the factors beyond the halving itself that could enhance or diminish, say, the impact on Bitcoin prices?
Correct. So I don't think it's completely priced in yet. The pricing in typically happens like maybe a few months closer to the event. Because around that point, what started to happen is that everyone who is in Bitcoin has parked their money somewhere else for some other opportunities that are there in crypto starts to move money in Bitcoin, because then that's the main thing that rallies. Historically, you would see that always what happens is that first Bitcoin goes up, then let's say Ethereum or the next top two coins go up, then there are a bunch of altcoins that go up and these come down, and then it just moves to random tail coins, and then it goes back to Bitcoin again, and that cycle just continues to repeat. We saw the same thing happen literally right now with the ETF etc. thing happening, where BTC went to large highs, and then as soon as
And it just came down.
it just continued to dip off. This typically happens because people who had bought in started to sell off. And in this case, a large amount of those that sell-off happened via one of the ETF holders themselves, which is GBTC. So that sell-off brought BTC down to close to 38, 39K, and now it started to pick up again. Because that pickup is now, because the market is now starting to price in the expectations of what will happen with the halving event.
All right. You just explained also earlier how Bitcoin halving will impact, say, cryptocurrency supply and the demand dynamics. Now, are there parallels, say, between a Bitcoin halving and traditional economic concepts like inflation, deflation?
Oh, yes, absolutely. So let's just talk about what rupee inflation means, right? Rupee inflation means that, let's say, if you were buying some basket of goods, if you wanted to buy the same quantity of those basket of goods, you will have to pay more rupees. Now, typically this happens either because these basket of goods are less in supply and the demand has gone up. So it's just the marketplace is pricing it in that way, and that causes inflation. Or it also happens because the government has just printed more INR. So everyone has more INR to give. And as a result, people are just paying more for the same amount. The supply is the same. The latter is what more often happens. And in this case, it doesn't happen just with printing INR. It happens with printing the US dollar, printing the euro, printing the GBP, printing the Chinese yen, and so on and so forth. Because we are living in this highly connected global economy, and everyone owns some amount of everyone else's currency as well, right? So, for example, it is like economists almost always quote this number saying that for every additional dollar that the US publishes, 70% of the inflation impact is spread to rest of the world. and to rest of the bondholders across the world, right? So US has this unique position where not all of its impact goes to it, and that's the benefit of the reserve currency. Having said that, coming back, because of money printing, there is just more money available, and as a result, inflation happens. It means that everything becomes more expensive. With Bitcoin, actually, I shouldn't say the reverse, but almost the reverse happens. Because supply constraints, demand goes up, and as a result, prices go up. So prices go up, but Bitcoin is not inflationary, which means that there are not more Bitcoin coming out. It's just that Bitcoin is becoming more expensive as such.
So just give us a sense, I think the lifetime, there is a limit of 21 million digital coins.
Correct. There is a limit of 21 million Bitcoins that can be generated.
Okay. So how many of these, say, have already been mined? How many remain? And also then what happens to mining rewards, for instance?
Right. So close to about 18 million have already been mined. And only about, as a result, only about 3 odd million remain. And the mining rewards are going to be set to 3.125 BTC now from 6.25. And that will just continue to get halved, and halved again till 2140. And in 2140, the last Bitcoin will get mined. Roughly, that's where it's expected. And after that, there will be no more Bitcoin that will be generated via the mining process. The mining process will still continue because miners make money not only by mining Bitcoin, but also by earning via transaction fees for the transactions that they mine. So the expectation is that whatever reduction in economic benefit to the miners happens via Bitcoin supply gets compensated by higher transaction fees. And higher transaction fees and the reason why it's expected that is because higher transaction fees will happen because more people will want to come and participate in Bitcoin because more transactions will come in Bitcoin.
But there's, this whole discourse about how the high electricity, the other hardware costs included, that Bitcoin mining will not be as profitable as it once was. What are your thoughts?
So interestingly, it's a very, all of this is also a part of the entire Bitcoin infrastructure already. So let's just walk through that argument. What happens if it becomes more expensive? Well, if it becomes more expensive, for those miners for whom it's not profitable, they stop mining. If they stop mining, that means that the competition in the entire Bitcoin network goes down. That means that the difficulty level of Bitcoin should go down. So what happens is that the Bitcoin algorithm automatically reduces difficulty level. So if the competition goes down, Bitcoin algorithm automatically reduces the difficulty level to change the incentive so that then more miners come in again, because then it becomes now economically profitable to mine at this lower level. So this part has already been thought of in the infrastructure of Bitcoin or the source code of Bitcoin as such.
Okay. What can be expected for, say, future of Bitcoin halving events? What are the trends or developments in the cryptocurrency space that could impact the dynamics that are connected to Bitcoin halving?
Correct. So it typically starts off with just more new money coming into crypto with the Bitcoin halving event, as more and more people get to know about Bitcoin. Because I think the way to think of it is that the halving event itself doesn't do a lot, but the entire conversations that happen around halving, because it's such a very unique concept and a very unique, for all practical purposes, Bitcoin halving is the Bitcoin monetary policy, right? So and Bitcoin halving event is basically that monetary policy coming into action. So there is just a lot of conversation that happens around Bitcoin, which causes curiosity, which causes more people to come into crypto, right? That's typically the starting point. And historically, what has happened is that when these people come in, these are some of the early people who come in, they get the benefits of the price rise that typically happens later on. That leads to those people then going out and boasting the fact that they made a lot of money in crypto, which attracts another large wave of investors, right? And then these people not only go into Bitcoin, but then also start looking for the next 5x coin, the next 10x coin, and so on and so forth. And most of those people who end up looking for such coins end up losing money. So the real thing for the rational investor to do is to come in, park your funds in BTC, ETH, maybe the top 5 tokens, maybe a crypto blue chip coin set that Mudrex has, and then just continue to regularly invest over time. So historically, what happens is that this wave of greed and fear actually plays out. It plays out over a period of a year and a half, where people come in, they start making money, that start making money, gets in more people, which leads to a new all-time high. And then once it's at all-time high, those people who've made enough money start selling off and start booking profits, which leads to the prices crashing. And then eventually people there is just enough sell pressure that the just prices crash to a new low, and then the cycle begins again. We saw this thing pan out 3 times now. There's no guarantee that it'll pan out fourth time, because now already a lot of holders of Bitcoin exist. Having said that, it seems that it's already happening in place. So I expect it to pan out the same way again. What
As
we
it
also
has.
see, what we also see is that with every Bitcoin event, with every Bitcoin halving event, this peak and trough, the highest level at which Bitcoin goes and the lowest at which Bitcoin goes, that just continues to shrink from a percentage perspective. Very, very early on, the gap used to be somewhere like 95%. Then it was about 60%.
Right, between the
Then it was
peaks and the
about
troughs.
correct, the peaks and the troughs. And those peaks and troughs have reduced, which also just again link back to the fact that more people are participating in crypto and in Bitcoin, which means that there is more liquidity. If there is more liquidity, the market is less volatile, and it becomes more and more and more stable and achieves its natural kind of sort of value where it should be.
Basically, you're saying, that this entire ecosystem, the Bitcoin ecosystem, is maturing. Now, for our show, especially for those watching, and this is now, my last question to you. How do you think investors and enthusiasts can stay informed and adjust their strategies as this ecosystem grows and matures?
Correct. So the way at least I think of crypto, and at my end, my thought process always is that, see, this is an asset class that's moving at incredibly fast pace. So if you really want to generate alpha, you need to go neck deep into it, which means that it almost becomes a full-time job. And for many people whose full-time job it is, even they are not able to catch up to it, right? So it is really, really hard to get neck deep into crypto, understand everything that's going on. We can choose the 5, 10, 15 tokens that you want to, and then keep on moving from one to the other, to the other, to the other. That almost never happens. And if it happens with someone, it is almost always luck and not really skill that panned out. So for most people who want to participate in crypto, they should always think of it from the perspective that Bitcoin is here to stay. It's going to be there for a very long time. And it's going to be a part of more and more and more people's portfolio. If you believe it and you are participating in Bitcoin for that reason, then what you should just do is buy either Bitcoin or the top 5 tokens, and do it in a format where you are just regularly investing in it, small amounts over time, so that you are able to create just long-term wealth with it. Almost always I've seen people who try and buy out because of some timing thing, where they say that, okay, market is now rightly timed and I should put in money and it'll go 5x from now and I'll exit later. That almost never happens unless you are putting in a lot of effort into it. So my, as such, I don't want to call it investment advice, but my strategy is that you should just prefer to invest consistently over a very long period, rather than focusing on timing the market and getting it at one point and exiting at the other. That's at least my strategy.
All right. Okay. And sounds like a good strategy. So thank you very much, Edul, for dissecting some of the intricacies of Bitcoin halving and delving into the potential impact. And, as you pointed out, the crypto market, especially Bitcoin, grapples with persistent challenges. There are always some legal hurdles, regulatory obstacles. There's also this whole issue with consumer adoption of crypto services, and as you pointed out a bit early on in the program, technological advancements, which could stand as potential game changers. So to all our viewers, thank you so much for watching. You can catch all our episodes of Crypto TV with Edul Patel here on our website, economictimes.com. That's it for now, and we'll see you soon. Goodbye.
Bye. Thanks a lot for having me, Miloni.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.